Good morning, everyone. Thank you again for joining us. Similar to Mike, I've been here for a few years, 28 years. Originally started working up in Canada, spent time in the US and in Mexico as well. So again, thank you for being here. So I'm going to talk about two segments today. I'm going to talk about our food and industrial ingredients business in LATAM, which includes Mexico now, and then I'll talk about our US-Canada business after we go through this. So some of the key takeaway messages for our LATAM business are we have a lot of experience in that market. And I know past success does not always guarantee future success, but in this particular case, I think our knowledge, our market position, number one throughout the LATAM markets, helps us drive innovation and growth for our customers and dealing with all the volatility and instability that can happen in those types of markets. We've been able to deliver consistent and profitable growth through long-standing customer relationships, operational excellence, and network optimization. And I'll just say this, as global accounts that we have relationships with begin to grow in those markets, we're positioned for that, as well as regional brands that are starting up in the LATAM market as well. And finally, on the trend around innovation, in line with the consumer trends and anticipating customer needs. We'll talk about those a little bit, but different than maybe in some of the developed markets in terms of affordability and those type of things as well. But it will continue to further reinforce our regional innovation position while leveraging what Mike Leonard's going to talk about from a global perspective as well. So over the past several years, Ingredion has been able to deliver very strong performance in the LATAM region, driven by local manufacturing presence in some of the world's most dynamic and growing CPG markets. So a couple of stats here, net sales down slightly, mainly just due to the price of corn on a pass-through from that perspective. Gross margins have gone up 500 basis points at 26% in 2024. And our OI margins have gone up to 20%, up 300 basis points as well. As you can see, we touch a lot of different applications in the region. We actually sell the whole portfolio to all of the customers within the LATAM region. And a couple things here, and Jim talked about this, you can use like competitive moat, but we have a very, very strong right to win in LATAM that I want to take away from this as a key message. In addition to our 4 Idea Labs / innovation centers, we have 15 production plants from Mexico down to Brazil, and our competitors combined have 6. So we've got a very, very strong position. And when you think about 90% of the products we make are sold within the region, that local service, that local knowledge really gives us a competitive advantage over our competitors based on our past. I talked about that history. Actually, this October, we're going to celebrate 100 years operating in Mexico. Brazil, we're at 96 years. Colombia, 92 years. We've got a smaller operation in Peru, but that's at 61 years as well. So long history in the region. We have over 1,300 customers, and we supply over 950 unique products in the LATAM region. So very strong position from a business point of view, but also in the future as well. Excuse me. In this region, we have the widest variety of products and solutions across the key categories in LATAM. You know, in addition to the food ingredients business, we have texturizers, sugar reduction. Jim talked about our beauty and home care as well, our industrial business and our agribusiness. And the good news is, as we look at this, we have the playbook in place to leverage that portfolio for today. And we also have the global experience and knowledge to grow with customers as the consumers' demands and preferences continue to evolve. And what do I mean by that? If you talk about some of the things that Mike Leonard talked about, or I'm sorry, Mike O'Riordan, we have the lift and shift approach. We've developed those solutions in Bridgewater, in Europe, in the United States. And as the LATAM market moves up the food chain in terms of packaged foods consumption, we can bring those ideas and solutions to the marketplace. So we're well positioned for growth today, but also set up with an eye in the future. We've got a great playbook moving forward. The LATAM market is very dynamic, as we mentioned, and poised for long-term growth as economic fundamentals continue to grow, supporting the development of our food, beverage, and industrial markets. So a couple trends, economic-wise, approximately 2% GDP growth over the next planned period of 3 years. This increase in the formal economy of 7 percentage points since 2004. That means instead of maybe getting paid every day and going to the market every day, people are getting paid weekly, every 2 weeks, and they're out going to the grocery stores, buying products, packaged goods specifically, and bringing them back to their home. There is some challenges. We're dealing with some front-of-label pack issues here in the United States, but in Latin America, these have been around for quite some time, whether it's sugar taxes, front-of-label packs in Mexico. And we've been able to navigate through those, again, by leveraging our global knowledge and innovation. but also looking at reformulation with some of our sugar reduction and other texture solutions to help through that process. Demographic-wise, 62% of the population in LATAM is 40 years old or younger versus 51% in the United States. And if you think of a population histogram, that kind of pear-shaped at the bottom, those people are moving up into middle class, they're better educated, GDP's growing, income's growing, which bodes very well for us versus the United States, where it's probably a more older population moving up. So that trend is our friend in that area. And the other part is the urbanization. We talked about this a little bit. Like 2 of the largest cities in the world are in LATAM, in Mexico City and Sao Paulo. But 82% of the population living in urban areas expected to grow to 2050, to 86% by 2050. So again, in those urban environments, working in different jobs, going to the grocery store versus maybe working out in the fields. In terms of consumption, we expect packaged food consumption in the market to have a CAGR of approximately 3.9%. And that's very different if you look at the US market and just UK for reference. They're about 2.3 and 2.6%. So almost approaching double the rate of growth in those particular markets. And I think this next stat is very interesting. So 24% of consumers in LATAM's disposable income is spent on food, right? That's a big number. In the United States, it's approximately 7 to 8%. So how we go to market, how we innovate, the type of products our customers want is very different than maybe in some of the developed markets. So that being said, as that innovation moves up, we've got the innovation solutions to bring those in as that market continues to grow over the next 10 to 15 years. And again, the trends such as functionality, affordability, and wellness will be significant, and we have the products and solutions to address those trends today and in the future. Just another stat here, the gray bar is per capita consumption of packaged food on the left, and on the right is beverage. The blue ones are Latin America. You can see the consumption rates are much less, and we forecast as we go forward over the next several years that that consumption rate in LATAM will continue to grow, which bode well for our customers as well. And long-term volume growth in CPG is expected to continue even beyond that 3-year horizon that we've seen. In terms of the addressable market, the CAGR rate for CPG products is expected to grow at 2 to 3% over the next several years. You can see our sales there today about $2.4 billion and an addressable market of $5 billion that should continue to grow. Some of the key areas that are driving that growth are, continued packaged foods consumption, the trade up for value-added ingredients as consumers start to earn more money and look at the products they consume differently. Affordability, that's not going to go away. We have to take that into account when we develop new products and innovation for the LATAM region. Diversification of that end product, I'll talk about that a little bit as we continue to trade up from maybe more commoditized type project to value-added ingredients. And it's a concern in the region that happens with many global companies is the FX has been a little volatile lately, but we have good ways with our finance team to work through that as well. So, as I mentioned, in LATAM, very, very sustainable competitive advantage today and into the future. That historical presence gives us a lot of knowledge and confidence from our past learnings as we go forward. Our local go-to-market and innovation, our customer relationships are very, very strong. They rely on us for the products today, but they're also asking about how can you help me in the future, reducing sugar, adding texture, perhaps including protein in some of these ingredients as well. We have that complete portfolio, right? So as I said, we can sell the more basic ingredients today, but as they move forward and they want to replace products with stevia, we're set up to do that, and we'll tap into our global innovation teams to execute against that in the region. And then the other side is scale and cost advantage. Having those 15 plants versus our competitors only having 6 in the region gives us size, cost, and service advantage, which is critical in those markets as well. So again, very deep knowledge in the LATAM market. We know how to adapt to change with our local teams. Despite some challenging business environments, we've survived and actually thrived in those marketplaces. So just to build upon Jim's pillars and what Mike talked about as well, so the 3 key areas of strategic growth for LATAM will be profitable growth, innovation for the region, and operational excellence and execution. So one of the key initiatives to enable that from a profitable growth perspective is to diversify somewhat beyond corn and the brewing industry. Mainly today we use corn. However, we're now making investments in growing our tapioca business in the Andean region, where we've got very unique properties with that product. We've launched a potato starch business in Brazil, and we're using that model from the United States to grow in that area as well. And brewing is a very important segment to us in LATAM and around the world. However, the raw materials sold into that are somewhat commoditized, right? So when we have opportunities to trade up our mix to add more value-added ingredients, we're certainly going to pursue those opportunities moving forward. We mentioned elevating our DA labs, connecting more closely with Mike Leonard and his team in our global side. We're going to accelerate sugar reduction, texturizer portfolio, as well as some other ingredients. We also sell a lot of specialty syrups in the region, and confectionery segment in LATAM is a very important segment for us. It's growing not domestically, but some of the largest exporters of confectioners are based in LATAM, in Mexico and Colombia. And we've been able to develop specialized syrups that look at different carbohydrate profiles, reduce sugar, and actually protect the product integrity during shipping, giving some of the temperatures down there as well. So we've got some really unique ideas there. And then finally, Jim talked about beauty and home care. So for us, globally, it's a growing market, and LATAM is actually the largest region for ingredient for beauty and home products. We see that trend continuing. The whole clean and simple that goes for ingredients that go into beauty products and home products as well is a trend that we're positioned very well for to continue to drive that growth. In terms of the innovation side in LATAM, we're going to focus on texture and sugar reduction, affordable cost and use, which is very important. Sustainability is critical in those markets as well, and we've got a strong focus in that area. Larry leads that up as well, and we usually bring that together with our business to talk to our customers about that. Solutions and responses to taxes and regulations. Sometimes in LATAM, there's good intention, but a lot of it's about tax revenue coming into the government, so just working through that and our customers as they look to reformulate. And then really optimizing that local presence and expanding our regional market. Here's a great example, and you talk about trends today. We made this investment in Mexico when I was actually living there back in 2018. And this is an investment in liquid allulose, which is used in sugar reduction across many different areas. So it's a low-calorie sweetener with functional bulking properties. So not only can it replace sugar in application, it gives the bulkiness. It enables significant calorie reduction. And keep that stop sign in Mexico off the front of the package. Good flavor and mouthfeel. And the beauty of this is we are approaching sold out on this particular channel and product line across North America. And we're looking at what that next investment potentially looks like for allulose as we continue to grow that and focus on sugar reduction. So again, we're going to strengthen our market position. We're getting more channel expertise and understanding our customers better. And we really think beyond the products today, there's really great opportunities for long-term growth related to innovation. And this is a great example of an investment that's paid off very well. This goes without saying in this market as well. We talked about affordability is a key issue. So enhancing our cost leadership to maintain high-level margins, right? So we've expanded our LATAM sourcing model. I think under Eric's team, under global procurement, put a lot of good resources in there. So keeping our costs down, looking at our raw materials and our chemicals as well that we use and making sure we're cost competitive. We will continue to tweak and optimize our network. What's the best place to sell from? Where do we source from? Optimize freight, logistics, and some of the tariff issues that we're facing today. We're going to boost plant reliability and efficiency, and we're going to continue to invest in debottlenecking and reliability for those products to maintain our leading position. And then I think this regionalization of supply chains, as I mentioned, about 90% of what we produce in LATAM is sold in LATAM, right? So it's hard for people to come in and penetrate that, but we're going to continue to invest and reinforce that position in the marketplace. But we do feel that operational excellence is a key driver for continuing to maintain, but also grow our gross margins as we move forward. So our outlook for the food and industrial ingredients in LATAM, net sales growth of 2 to 3%, somewhat dependent on the price of corn a little bit, but we're confident that will be our number off a base of $2.4 billion. Gross profit margin of 26 to 28%, and coming off of base right now of about 25.7, so we continue to see margin expansion in the region. An adjusted operating income of 5 to 6% growth on a CAGR basis. That's coming off a base of $483 million as well. So very large contributor to Ingredion's overall OI. And just to summarize for LATAM, that I don't want to minimize that experience, but also those leading positions, number one, in the markets in which we operate. It gives us access to the customers today for those products, but also the innovation as we go forward. Delivering consistent, profitable growth, customer intimacy, knowledge. when they come to us looking for challenges, they're going to call us first. They're going to look at opportunities to reformulate, and we're going to be on the front of that to work with them to help those work as long as and align with our network optimization. And then the innovation side as well. This will continue to be an important part of our business there and our journey there. And the good news is our global network is very strong. And as I said, we can lift and shift those ideas from other parts of the world as LATAM consumer trends change.